It's about that time of day again. My name is Joseph. It's Monday evening, June 26th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bullish with a spike in channel this evening, but a key clue from a market mistake tells us to avoid buying high and focus on traps and failures down in the battle zone tomorrow. The S&P is bearish and trying to finish rotation back to the low of the range. Yeah, the same range you guys did so well with last week. But we're getting too close to the middle tonight, so we're looking for traps to sell high and avoid that middle tomorrow. Gold is bearish after this morning's flash crash, so the plan is to stay patient for an opportunity to sell up at the same price that the crash began on Tuesday, with the target going back down to that low. Get a great chart on the gold tonight. Euro's bearish and trying to retest today's low, but some recent price action on the chart is telling us these sellers aren't looking to sell this low, so we're looking for selling opportunities up in the battle zone tomorrow to sell high. And of course, we'll wrap up tonight with the FDAX. The DAX is bearish and trying to finish rotation back to the opposite side of the range, but we're getting a little bit too close to that middle. We don't want to focus in the middle, right? We want to focus on traps to sell high tomorrow, with the target going back down to that low. Hope you guys had a great weekend. We're back in the action from the big week of trading opportunities on this nightly newsletter. Had a great week last week. Hope you guys had a great weekend. We're going back into the end of the month of June. That means we got more volatility, more opportunities as we wrap up the month of June, as we go into the end of the month of June, and get a great newsletter in store for you guys and gals this evening. Before we jump into our video tonight, though, I do want to remind you the only place to watch the full-length version of this nightly newsletter is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the full-length version is ready to go live. Follow me on social, lower left-hand corner. Follow me on Twitter, Facebook, LinkedIn, StockTwits. I'm always posting important charts, links, and updates throughout the week. Grab those charts. Very, very easy to have all the charts from tonight's video on your computer for tomorrow. Right where it says click here to download today's charts, follow that link and get those charts ready for your day tomorrow. While I got your attention here, don't forget to grab your free pass in the upper right-hand corner. Trust me, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Make sure you grab that free pass and come join me in the trade room this week as a guest. We got a great frequently asked questions page on our blog, and I also want to remind you guys to hit me up on live support if you have any questions any step along the way. Once again, hope you guys had a great weekend out there. Back in the action here. Boy, it's some beautiful weather this time of the year here in Los Angeles. Just starting to burn off the June gloom and starting to get into the meat and potatoes here of the summertime season. Tomorrow's a brand new day filled with new opportunities. Let's get at it. Tomorrow's the 27th. No major news on the schedule for tomorrow. You can see there's really nothing here coming out of the overnight session, and it's a pretty quiet day tomorrow. That's going to be about all the quiet we're going to get here this week. As we go into the end of the week here, we got some trade numbers, we got some jobs numbers, we got some, of course, income numbers as we go into the end of the week this week. But as you can see here in the overnight session, nothing but some small stuff. And of course, tomorrow we got the home prices at 9 a.m., consumer price at 10 a.m. These are minor news events. I don't expect them to have too big of an impact tomorrow. I do expect us, though, to continue watching those prior week and prior month levels, because a lot of these markets right now are trading inside of ranges, which we'll talk about here in just a moment. Speaking of which, plan for tomorrow. Don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time, along with all the other advanced members. Come out and trade the strategy right along with me. Starting off tonight with crude oil. We'll go crude, S&P, gold, euro, and we'll wrap it up with one of our favorites, the FDAX, here this evening. Crude is bullish with a spike in range or a possible spike in channel tonight after a strong move lower turned into an equally strong move higher to finish today's session. Did I mention volatility increases into the end of the month? You're going to see a lot of that, guys. As we go into the end of the week, end of the month, we always expect to see traders taking bigger risks. We expect to see more volatility, and today was a pretty good example of how the volatility will be expected to increase as we get closer to the month of June. The buyers right now who have control are trying to retest today's high, but look closely, that market mistake. Big green candle, bigger red candle. We call it a market mistake in our trade room. That market mistake off the highs tells us the buyers aren't quite interested in buying this high. So the plan is to look for buying opportunities with traps and failures in the battle zone tomorrow. As you can see here, real strong reaction just shy of 11 a.m. Eastern time this morning. The market, of course, pulls back and makes a new higher high. That creates, right, that potential for a spike in channel. A spike in channel tells me, let's buy the dip. Let's buy down in that battle zone, right? That's what a spike in channel tells me. What else could this be? It could also be a spike up, pull back, and a retest of that high. Look at this now as a spike and range. I'm looking at the range a little bit tighter than you can see here, right? But I get that nice tight range. Now, what does a range tell us? It tells us pretty much the same thing. A range tells us to look for failures, 1 try, 2 try, and buy down in that low. So 2 scenarios, either 1, a spike and channel, tells us to buy that dip, right, for the retest of the high. 2, what I think is more concrete right now is that spike in range, 2 try rule, failure, buy low for retest of that high. Now, what is very important, remember, is those buyers are trying to retest today's high at 43.65. And normally, once we start getting up around those highs, you see buyers start to shy away because they don't want to buy high, they want to buy low. And that brings up what I think would be one of the most important clues that we see on this chart. And it's a little clue, we call it a market mistake. Now, a market mistake is pretty simple, right? In a bull market, when I see the market running higher here, and we go up with a real strong green candle, and that follows up with a stronger red candle, right? An engulfing candle, right? A candlestick that is larger than the green candle, right? When it basically takes over that green candle, right? That's what tells us a market mistake. Market mistakes will happen, the most reliable market mistakes or actionable market mistakes will happen at some level of resistance or support. So, for example, this particular market mistake happened when the buyers went back to retest the high. So think of the psychology going on in the heads of the buyers, right? The buyers see a real strong move up. They buy the pullback like a good buyer should in a strong bull market, and they go back up to retest the high. Now, this is where it gets important. What do they do at the high? Do they keep buying, or do they take all their profit? Well, judging the market mistake, it looks like buyers weren't too keen to keep buying high. So, of course, they take their profit. Big green candle negated by a bigger red candle. That's a very good psychology clue. That puts us in the mindset, right, of the collective body of buyers, right, in this market right now. So we already know that we really don't want to buy high to begin with. This is giving us concrete evidence now that we definitely don't want to be buying high at this point in the game. So what's the plan here for tomorrow? Well, we'd love to get this price down into the battle zone. That would just be ideal. And of course, a few different ways we can look for a buying opportunity tomorrow. The first one would be the most aggressive. Will be a trap low below 22, right? Trap low, anytime we go below a prior swing in a bull market, trap low below 22. Hey, we also may see a failure set up into that as well, right? Trap low, seller failure, right? 2 try for the bears, failure, and back up. Hey, we might also see a little bit more dramatic pullback. It may also pull back a little bit more dramatic, right? A 2-legged pullback. Not a very good drawing job on that one, Joe. Right? A 2-legged pullback, which usually involves a trend line, right? Trend line starts off as resistance and then can be used as support. Bottom line is I do want to buy low here tomorrow. If the price does push higher here, what's the plan to push higher? Well, as I always remind you guys on this nightly newsletter, anytime we have a bull market that doesn't give me really any choice but to buy high, I always go looking for traps. So if it does go punching higher here, I do not want to take the bait and buy high. I want to keep focused on buying with those little trap lows, right? And that goes for really as high as it goes. If it jumps really high, right? Trap low, right? And buy that trap low, right? Don't buy the pullback, buy the trap below that pullback. Now, where would the targets be for those buyers here? Well, again, obviously, like I said earlier, right, the buyers here are trying to get back to that 43.65. What if they run through that level? Well, there's a measured move up top here, and that measured move will definitely start acting right as the next objective. If they can push through and continue through that high, how will we know? We'll know that if they can run up, we'll trap low, and then retest, right? And then retest that medium-term high. If the buyers can get a pullback here above those highs and retest that high, we know the odds are very, very good that we're going up to that measured move at 44.09. By the way, how do we turn bearish tomorrow? I don't care what direction I trade in, and neither should you, right? A chart is a chart is a chart. I don't care whether it's crude or euro or gold or S&P. Right now, the buyers have control. Therefore, looking to buy dips, traps, failures, two-legged pullbacks. How do we turn bearish? It all starts with a first strong move down. That strong move down, rather than failing at the moving average and going back up, right, they'll hold that pullback and run lower, right? The key here is if they run this sucker lower, right, running it lower, that'll be your clue, right? Those bears have taken control, and their objective will be to retest that low at 42.63. Don't forget, we're going to execute this plan tomorrow with all of our advanced members. Come out and join me. We open up at 8 o'clock Eastern time. Let's keep going. How about some S&P? The Emini is range bound. Yeah, the same range from last week. Had a field day on that range last week, if you recall, and try to finish rotation back to the low of the range tomorrow. Now, you can see on the chart, we're getting real close to that middle, right? We're right in the middle. Now, I don't want to fiddle with the middle, right? So in the attempt to avoid this middle, we're looking for selling opportunities up above the moving average, preferably using the battle zone for a sell back down to that low. Now, one thing that stands out on this chart is the day began with a spike in channel. Now, remember, guys, whenever a spike in channel fails, price typically goes right back to the beginning of the spike, down there at that 24.30 area. So I would expect this market to push through the low of that range if in case you got an extra bullets, right, extra bullets left in the chamber and you want to hold a runner down near that measured move tomorrow. Normally, I would say expect the market to go back to the low of the range, but because the day began with this spike in channel here today, and this may have been reaction to the flash crash on gold, which we'll see in a moment. But that spike in channel, you can definitely see here, right? The buyers completely fell apart. Again, end of month volatility is exactly what we're seeing here right now. Most important thing about that is that's going to be the objective now for those bears. Well, I shouldn't say that. The objective for the bears is to go back down to that 24.31, which of course is the range low. It's probably not going to stop there. It'll probably run down to that spike, which means the measured move will make for an excellent runner target for those bears tomorrow. Now, we've talked about trading ranges here quite a bit over the past week or two on the newsletter because a lot of markets have been range bound. What we know is we want to sell the high, we want to buy the low, and we want to avoid the middle, right? Don't fiddle with the middle, right? Avoid that middle, right? That's the no trade zone. Don't fiddle with that middle. So how do we do this right now? We're back in the middle, so what's the plan here? Well, the key is to focus on the two-try rule. I've got some levels of resistance here. This is prior support that will act as resistance, right? This is, of course, a prior high. This will act as resistance. This, of course, creates the battle zone. What I'm looking for is one try, two try, and back in. Up one, twice, failure, back in, right? We see this quite a bit here. Up once, twice, and back in, right? Up once, twice, and back in. So again, we talked about this in tremendous detail last week. So if you're with me last week, right, just keep doing the same thing you did last week because not much has changed here from 1 week to the next. If you're brand new here with me, don't forget we cover trading ranges and the trading range strategy in the intermediate and advanced classes here at School of Trade in case you want to learn more. And I talk a lot about that in our free trial as well. So two-try rule, focus on failures. Up, one try, two try, back down, stay away from that middle, and then again, one try, two try, right, and then back up. Now, talking about avoiding the middle, the hardest part about ranges is if we don't get a chance here to sell high, right? If you weren't in off the failure here, if you weren't in off the failure here, if you're trying to fiddle in the middle right now, because I remember when I was a new trader, what I would do to justify this is I would say, well, I know it's going down to the low, so let's try to trade a pullback here in the middle. The problem is that pullback oftentimes fails, and it fails, and it fails, and it fails, and then it runs. I also want to remind you how much I appreciate your time every evening this nightly newsletter. Don't be afraid to share this video with a friend of yours. I'm sure you get lots of trading buddies out there on the interwebs that would love to learn these great techniques of technical analysis. And please don't forget, right, we cover our trading strategy inside of our advanced course, but you can learn more about the trading strategy in our free trial if you want to learn more about how we trade, why we trade, what we trade, when we trade, right? We'll cover all the who, what, where, when, and why. Take that free trial, learn more about what it feels like to be a client here at School of Trade. Look at our 3 levels of membership, our beginner, intermediate, and advanced levels of membership. We got some great videos on the website that will give you a good rundown of what's included. And please don't forget, I'm always here to help. I know that most websites are automated with lots of robots and pre-recorded videos these days, but I'll tell you right now, if you pick up the phone or use live support, I will be on the other end to answer that call, and I'd be happy to speak with you to help get your trading career off of the right foot or back right into being consistently profitable again. Whether you're brand new to this, right, or you're still trying to fit the pieces together to find consistent profit, I have helped thousands of traders do this the right way in my trading career, and I really hope to have the chance to do it here with you guys as well. Guys, don't forget, tomorrow morning, 8 o'clock Eastern time, back in the trade room, we're going to execute this plan with all of our advanced members. If I don't see you there tomorrow morning, we're going to do it again tomorrow night, 8 o'clock Eastern time, Monday through Thursday. I'll be there. Will you be there with me? Hope to see you there. Be well out there. Be nice to each other. And be here tomorrow, guys. Adios, amigos.